Hi, I'm Jack Mohr, Research Director of Action Alerts Plus. I'm here with Mike Khouw from Action Alerts Options. Let's talk about Twitter. It's been a tough week.
It sure has. I mean, it's been a tough week. It's actually been a tough quarter, really, for social media stocks. I mean, maybe with the exception of Facebook, and to some extent, if you want to include Google, because they have some limited presence in that area, you could say that they're a little bit more resilient. But I mean, take a look at what happened to LinkedIn. Obviously, Twitter is a big mess. It's interesting to me because in Twitter's case specifically, I feel like we have one material unknown sitting on the horizon, Periscope. You know, just anecdotally, it seems to me like that's going to increase engagement significantly. That wasn't obviously going to show up in this quarter at all, and we're not going to get any transparency on that until the next quarter at the very earliest. So right now, it kind of seems a little bit like we might be in a situation where we might be dealing with a little bit of dead money for 30 to 60 days anyway, I suspect.
Yeah, I think a big thing is that the trust in management has eroded, and they lost that trust because in the fourth quarter, they made some pretty strong promises, some pretty big promises, and laid out some pretty aggressive full-year expectations. And I think they were getting excited about Periscope, about some new products, about partnerships with Google, and so they set the expectations very high. And Twitter simply did not deliver. But worse, they basically said that we don't know what's going to happen the rest of the year. They lowered their guidance, but they didn't even provide guidance on active users. And so I think that it's going to take actual results to get investors back in this stock, and I don't think results can come, as you're saying. I don't see results coming in the next quarter, even potentially 2 quarters. So I think that's where it makes it not as compelling to snap up shares at these levels.
Yeah, I think investors who are in the name who are wondering why this stock and others like it have fallen so sharply kind of need to take a step back and think about how people value these things to begin with, right? So you end up trying to take, obviously, management's guidance and you throw some type of a multiple around the growth that you expect. So we have lower growth, we have lower transparency. Both of those justify a lower multiple. So, it's sort of a compounding effect, and that's kind of what's hit these stock prices. The interesting thing, though, for investors who happen to be in it and want to hang out for a longer term, there's 2 things I would point out. We're only about 25% above the all-time post-IPO lows that the stock hit. So, when you think about, 25% lower from here probably sounds like a long way to go, but my guess is that, that's really the worst possible case, and I'm not really even thinking it gets down there. The other thing that's interesting is that when stocks really start to bump around like this, options premiums remain elevated. So if you think the stock's going to sit here, one of the things you can do just to lower your cost basis, consider selling some upside calls. It might seem counterintuitive to do that, but consider that before the next quarterly results are announced, it's really unlikely that you're going to have a huge catalyst that's going to propel it higher. One of the things people always talked about, what if Google buys them? Well, when a buyout is going to be accepted, usually management's going to look for something close to a recent peak in the stock price as a baseline for where they're going to expect it. So you're looking at $55 minimum is what they would consider, and it's hard to imagine why any management company is going to put their foot into the trap and say, okay, yes, I think now I want to step in. So I would actually say, if you own the stock, consider selling some June 40s or the June weekly 40s. You can collect 2.5%, 3%. Still have upside to that 40 level and slightly beyond, but it seems unlikely to me that we're going to blow much through that by then.
You actually made a good point, because I think a lot of the run-up, into the quarter, that was a big issue, right? 42% run-up right into the report, and it was buoyed by that promise, but also by a lot of takeover speculation, and I think it got some validity from sources that really don't have much validity, but I think you saw it actually being discussed in research reports, and I think that started garnering this interest in the name as a potential takeout option that really isn't there, and I just don't see that. You can't bet on that. You certainly not after this quarter. As you said, the price that management would require is way higher than I think what even a Google would pay, even though there are synergies. So I think that from a stock perspective, fundamental investor perspective, it's going to take some time. I think it gets interesting longer term. The sentiment couldn't be more negative right now, of course, and I think that a lot of investors have jumped ship. Certainly anyone who is institutional on this is saying we're not touching this for our clients, but I think that, look, the opportunity here, it does exist. They do have some innovative products, partnerships with Google, the Periscope, as you mentioned, take time to actually see those results, but there is 1 million users signing up in the first 10 days. That's a great data point, and I think that longer term, I think this Google partnership is so important because Google knows better than anyone else how to monetize, how to make advertisers understand the value of their product, of their platform. So I think that if Twitter can at least utilize that, leverage off of that, and start communicating to their advertisers, hey, this is why you need to advertise with us. We have 500 million logged off users. We have 384 million or something around that monthly active users. And so it is a compelling platform. There aren't that many social media platforms out there that have that scale, that size, and certainly some level of that engagement, but these things take time. And I think that you've seen it. I mean, Facebook, it took a lot of time for them to figure that out, and they were way ahead of Twitter even when they were at their kind of, struggling to figure out monetization. That was their argument. It took a year from them to really come back from that. So I don't know. It's a tough one to be in, and it's I feel a little stuck right now owning it, but it is what it is. And I think I think you make some good points, and I think you, as an investor, you can't get too excited right now, though. I don't think it's the time to just start gobbling up shares because, as you said, there is still some downside. So that's where I stand.
Yeah, I think people, you've made a great point about institutional investors. One of the things that people have to remember is that, if you are an institutional investor, you have to answer essentially to your investors. And, do you want this thing on your 13F? You want to explain, especially if it continues to demonstrate some weakness. But look, this is still a double-digit revenue growth story. I think that's something that, there's not a lot of places that you can go in the marketplace and find that. And we actually have opportunities here, and probably we'll get even better opportunities. But, we haven't had a look at this stock at this price for a little while. And so I think now is probably a good time, if you're in it. I wouldn't necessarily blow out of it, but I would try to lower my cost basis a little bit. Don't sell calls, though, beyond the next quarter, though, because I have no clue what they're going to be talking about at that point. I think, just sell some in front of that, bring that cost basis down. You'll probably collect about 6% on your investment in the meantime. And, we're going to hit the pause button here.
Yep. Thanks, Mike.
Thanks.